This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Hello everyone, Andy Pickering here, and we have a very good show for you today. But before we get into it, need to shout out our new sponsor, Nexo. Yes indeed, are you ready to grow your wealth with the world's leading digital assets institution, Nexo? Well, you should be ready, because you can earn up to 12% on your digital assets with Nexo's high yield savings account. That's right. So treat yourself, treat your crypto, and treat your fiat with the industry's best crypto and fiat services, which include compounding interest paid out daily. There are 18 available cryptocurrencies, including Bitcoin, Ethereum, Litecoin, various stablecoins, and many more. And 3 fiat currencies are accepted, the euro, the pound, and USD. And Nexo has up to $375 million worth of insurance across all custodial assets. Top-ups and withdrawals are available at any time, and there are 0 fees for using the Nexo Earn Suite. So, are you ready to start earning? Of course you are. Simply go to nexo.io, and of course that is spelt NEXO.io. And now it's on with the show. My guest today is Bill Barhydt. Bill is the CEO of Abra, the platform that enables crypto banking services for consumers and institutions. And they offer services such as trading, high yield interest accounts, borrowing and lending, and much more. And Abra has customers in over 100 countries, I believe. But hey, welcome to the show, Bill.
Thanks, Andy. Pleasure to be here.
All right, so just before we get into Abra, Bill, you have quite an interesting background, I can see. So in my notes, I've jotted down that you began your career working in R&D at the CIA and at NASA. So, you know, that's always a little bit interesting, a little bit fascinating. Could you just give us a brief, snapshot of what you can share as to what you were doing with the likes of the CIA, and maybe just give us a bit of a career background.
Sure. It was a long time ago. I was basically a kid working in their, I guess they would call it OIT at the time, Office of Information Technology. But basically, I was a cryptographer working on secure messaging to enable messaging between facilities all around the world. And I'm sure, I mean, this is literally 28 years ago, I think. So I'm sure things have changed significantly since then, and technology's changed dramatically. Encryption and the way you do messaging has changed, and the way you use the cloud has changed. But it was certainly a fantastic experience. I learned a lot, and it was one of my first, I'll use air quotes, real jobs. So, you know, it was amazing that at, like, I think I was 19 when I started, that I could get exposure to that world at such a young age and have no clue what I was doing or talking about at the time. I was just really good at math and programming, and so I guess I could add some value, but it was almost silly in hindsight. But I leveraged that to do a bunch of other things. I was able to get a position at Stanford and NASA Ames and make my way out west, and which was really my dream, was to start to see the world. And so that segued into a long career of traveling the world and helping to build out the commercial internet, and going back to work on Wall Street for a while, making my way into emerging markets, and that ultimately being an awesome segue into crypto over probably a 25-year period.
Yeah, interesting, Bill. So you're talking about building out, I guess, did you say building out the some of the core internet infrastructure? And so, again, just referring back to my notes, and look, you know, we won't spend too much time on your background, but this is interesting. So you were one of the early team members of Netscape, I believe. So I guess this would be right at the sort of the early days of the internet, right?
Yeah, so at Netscape, we had created a whole bunch of new technologies, right? We commercialized the web browser, then we created SSL, HTTPS, but all of the infrastructure to have secure connections on the commercial internet weren't there yet. We launched the first web server that supported SSL. Then we had to support certificate authorities around the world to get them integrated into the browser. Also, intranet projects that needed to use SSL. So I worked on myriad aspects of getting all of this deployed over several years, and then also spent a lot of time on internet banking services as well as the kind of early consumer retail internet as well.
And so, what then? You obviously have a long background and interest in programming and computer science and cryptography. When did you first begin to encounter a blockchain then, and what were your first points of contact, and what were your initial thoughts?
Well, I guess technically, if you ask it that way, I did hear of Hashcash before, but as it relates to Bitcoin, I probably read the white paper, oof, I guess 90 or 100 days after it was first posted. If it may
Wow.
not even have been that long.
Yeah.
Now, I discounted the idea because as part of the cypherpunk community, we all knew that the holy grail for digital money was solving the double spend problem. But this guy was proposing using every computer in the world, and that sounded crazy. Today we know that as the fight over proof of work versus proof of stake, I guess, to some degree, right? But once I kind of dug in again and said, maybe this guy is onto something. Maybe it's because he's taking a totally wacky different approach that this could work. And once I dug in again and talked to some other folks who said, I think this guy is onto something, then I realized that, hey, there's something here. And if this person really solved the double spend problem, this could change everything. And anyway, so it took me a little bit of time to come around to the idea of that kind of approach to solving the double spend problem. Part of why I'm convinced Satoshi is not an academic, because no academic would ever propose using every computer in the world to solve the double spend problem.
Well, that's interesting, Bill. So, two questions. So, were you a member of that? I guess cypherpunk mailing list that obviously it's a famous story. Satoshi was on that list, and that's where he first published the white paper. So you were part of that community.
Yeah, I used to read the archives because you couldn't really subscribe via email because the messages would be so annoying how fast they would come in. So I would actually process the archives a couple of times a month and just look at what was the latest and greatest. And it was amazing how many interesting, brilliant people were on those lists back then.
Yeah, well, it was certainly, it's just the early days of the internet. And so anyone who was, I guess, inclined to esoteric pursuits such as cryptography and so on, they were early adopters of the internet. So, of course, that's where they would be hanging out. What did you mean by, you said that an academic wouldn't come up with the crazy idea of trying to, I guess, distribute a computing network across every computer in the world? Why wouldn't an academic have that approach?
It's a great question, and I'm surprised that people don't talk about this very much, right? I mean, look, Bitcoin's breakthrough is that it's censorship resistant, trustless, and solves the double spend problem at the same time. The fact that it uses effectively every computer on its network, liken it to the Matrix, right? And so effectively, it's using every computer that it knows about, right? That is not an elegant solution in the sense that it's the most inefficient transaction processing system ever designed by man. Now, it wasn't designed to be efficient. It was designed to solve the double spend problem in a way that's trustless. And in that regard, it obviously succeeds amazingly well. But my perspective is that most academics would look for that elegant problem that doesn't use every computer in the world and actually represent some modicum of efficiency in transaction processing. At least that's my belief. I obviously can't prove the negative. So I intuitively believe that Satoshi wasn't a traditional academic as a result.
Yeah, that makes sense. And I guess, for Satoshi, obviously, or whoever he or she or they were, he's been able to really game out all the kind of the adversities that such a system would potentially face, and that's why you have this incredibly, as you say, slow, clunky, and inefficient system. But of course, it is it's tough to attack, right?
Right. I think if you're sitting in a professor research office and you said, Here's a way to solve the Byzantine general's problem," they'd probably go, "Well, that's stupid," right? And well, that's stupid. And I could kind of hear those words coming out over and over again. Not to put down like every professor I've ever known, but I still think that when you think it through, it just doesn't sound like an efficient solution. But obviously, here we are, 12 years later, and it's been working amazingly well. And we all accept the fact that it's not efficient, but it solves the problem it was trying to solve incredibly well.
Yes, indeed. And look, we may, I could probably talk sort of, esoteric blockchain theory with you all day, Bill, and maybe we'll circle back to that because your perspectives are more nuanced than most, I suspect. But we do need to talk about Abra, I feel. So let's, I guess, jump forward a little bit from the genesis of the Bitcoin blockchain, and maybe just, so what happened next for you, and what happened between, the genesis of Bitcoin and the founding of Abra, and how did that happen?
Yeah, good question. So I was working on another company at the time. I was running a company called Boom Financial, which was operating in the remittance space. We were working with developing markets to make it easy to use feature phones and later smartphones to send money between the US and home countries, United States, Mexico, Philippines, Haiti, some cases, larger countries, but then in some cases, even bottom of the pyramid countries. And I was fighting all kinds of legal battles to try to improve the way money transfer worked and remittances, and actually improve people's lives, because the fees are just outrageous, and a lot of people have to travel for hours at a time to pick up money being sent by family. And so it was interesting. I actually was looking at cryptocurrency, Bitcoin, from that lens, right? Obviously, the digital gold concept didn't really resonate with anyone, uh, you know, 11 years ago, right? Anybody who says, "Oh, this is going to be digital gold," was lying to you. They didn't know. And so I was thinking about this, from the title of the white paper as peer-to-peer electronic cash, and basically saying, could this solve the money transfer problem that I've been working on? Because I have all these middlemen, these banks in the middle of the transaction taking a piece. I have governments in the way telling me what I can and can't do. And all I'm doing is trying to help people, right, by making it cheaper to send money home. And it's funny because we've come around again to this idea with all of the happenings in El Salvador and lately Cuba, and this past week in Afghanistan. And everybody's talking about remittances and money transfer again. And that was really what drew me to Bitcoin in the first place, was its utility for cross-border transactions, where you could eliminate all of these people with their hands out, taking arbitrarily a piece of other people's money. And it kind of represented a legal way of looking at the old Hawala systems that run in the Middle East, right? Where a Hawala system is generally considered illegal in the West because you have all of these people in the middle that are unregistered money transmitters. But now you could use Bitcoin without actually having any of these illegal people in the middle and actually have like kind of a legal Hawala. I thought that was super exciting.
Yeah, very nice, Bill. So, well, if you were to, I guess, describe the vision of Abra just at a super high level in one sentence, what are you trying to do?
Well, I want to be the premier crypto banking service to make it easy for people to use and take advantage of what crypto offers them, whether it's to store their wealth in the form of digital gold, to get credit, because over time, if Bitcoin and other cryptocurrencies become the appreciating assets and cash, traditional cash becomes a depreciating asset, people are going to want to borrow in cash while holding Bitcoin. And I think that's the future of lending for many countries, right? There's also, payments and money transfer, which I just talked about for a few minutes. And so we want to be the banking service that people use to get access to crypto, to borrow against crypto holdings, use crypto to send money. I think this leapfrogs the traditional banking system and becomes the model for banking in the next, 7 to 15 years. I think you'll see early adopters use this as their core bank account first, as we're starting to see with Abra, and then it'll become mainstream, a bank replacement for those 20 somethings who don't see any value in traditional banks anymore. And Abra is going to be at the forefront of making this transition happen.
Yeah, absolutely fascinating, Bill. I mean, you paint quite a compelling picture there, and that makes perfect sense to me. There's sort of there's these competing narratives, right? So you've got legacy banking, legacy finance, cumbersome, slow to move, but that's where everyone is at the moment. Then you've got fintech, which depending on where you sit, is sort of just trying to. It's a fancy front end on the old way of doing things. Then you've got the big exchanges like Coinbase, which are kind of slowly transitioning into becoming, I guess, the crypto banks of the future. Then of course we've got the rise of DeFi, which is trying to leapfrog everyone, and so in that kind of context, how do you sort of navigate that landscape, and who do you see sort of shifting ahead?
Sure. I think there's protocols and I think there's services, right?
Right.
To
Sure.
me, ultimately, DeFi is going to win at the protocol level. We'll see what happens at the service level. And so, what I mean by that is, and the SEC has actually been making this argument for me this week as well. If you think about what works in DeFi, the protocols themselves have no off switch, but the companies that are using the protocols, right, meaning the web browser of Uniswap that actually builds the trading service that uses their AMM, that has an off switch. That's a centralized system. TCP/IP, to make the analogy, is decentralized. There's no off switch for TCP/IP, right? Netflix has an off switch. Okay, so my belief is that this will evolve in a way where the certain protocols, Bitcoin as a protocol, besides just the currency, Ethereum as a protocol, Uniswap as a protocol, Cardano as a protocol, will ultimately become fully decentralized, have no off switch, and have their place in certain service providers. Whether companies and services themselves become true DAOs or true autonomous organizations and services remains to be seen. I'm a little skeptical in the short term, although I think what Shapeshift is doing and what Eric and the team have done there is super bold. We'll see how that plays out over time. Even they had to provide a roadmap which says we're not going to be decentralized on day one, but maybe over many months and a couple of years, here's how it might happen. And so I think that companies like Abra, to get back to your question, now become that really compelling user experience to make crypto truly as easy to use as Netflix makes TCP/IP easy to use for streaming a video, right? And that's what needs to happen, in my opinion, if this is going to go to 3, 4, 5 billion users. Yes, there will be people who will store Bitcoin in hardware wallets, have autonomy, self-sovereign agency over their wealth. But if you've ever used a hardware wallet, and obviously I have, it's very daunting for most people. And that's not how I think most people are going to get in and out of crypto, at least in the early days. And we'll see how it evolves from there. But I think companies like Abra are going to play a critical role in providing the on-ramps to having exposure to cryptocurrencies, to borrowing in cash against cryptocurrencies, being able to pay, all of the things that a traditional bank would do, but now in a crypto-centric way. I think the exchanges as order books, that provide liquidity are going to have a critical place to play in this ecosystem. But I also think that there's going to be a whole new banking stack that evolves separately from the exchanges. And Abra is, I think, one of the early players in that new crypto banking space.
Yeah, nice, Bill. And look, you're right. The hardware wallet, sovereign individual style crypto experience, while that kind of is, the core of crypto, the reality is, it's just humans, we're just not necessarily, well, a lot of people just don't find that kind of, I guess, technology experience. It's daunting, right? And a lot can go wrong. And if you're trusting your kind of your net financial worth to something like that, there's just scope for things to go wrong, right?
100%. I mean, look, we're moving millions of dollars a day around from wallet to wallet, from institutional borrowers. They're making payments back. We're making loans to consumers, all via crypto, and it's daunting for everyone. And there's no one who escapes the daunting nature of this. And what we try to do is obviously make it easier and hide some of the complexity. But if you're in the middle of it, you realize how hard it is. And it's like dealing with packets of TCP/IP as opposed to just watching a video. And that's where we're at when we talk about using things like hardware wallets. And I think these crypto banking services, therefore, I know I'm repeating myself, but they're essential in making all this work.
Yeah, I couldn't agree more. I mean, if mass adoption means actual mass adoption in terms of the majority of the population eventually using crypto, then yeah, that some of that complexity needs to be abstracted away. There's no doubt about that. Well, let's talk. I guess, growth metrics then, Bill. So, I'd love to understand a bit more about, what kind of countries you are concentrating on, where your user base is, and yeah, what your kind of growth curves look like, what kind of metrics are most interesting to you.
Sure. There's so much to talk about there. So let me start with just the geographies here. So we're biggest in the U.S. That's where we started, of course. We have a lot of high net worth customers in the U.S. who trust Abra for their crypto purchases, family offices, all the way up to high net worth individuals to everyday retail investors. It's an interesting mix. And now the borrowing aspect of our business is growing quite fast in the U.S. as people become let's call it crypto rich. A lot of them are looking to borrow against those crypto holdings, potentially reap some of the gains without necessarily having to sell, so they can continue to get the upside and not necessarily have to pay any capital gains taxes in the short term, which is also a big benefit. And then we have our emerging markets business, right, where we have customers in Southeast Asia, South America, Central America. Of course, we're growing in Europe. Our UK business is doing quite well. We have customers in Eastern Europe as well. So every geography now is showing growth for us. And our plans now are significant expansion. We have an institutional sales team that talks to family offices, high net worth consumers. We have our retail growth team that focuses on growth via our app, with our presence on social media and PR and efforts like this, and speaking at conferences, and a lot of YouTube work there, and which is all reaping benefits for us. And so word is getting out. It's a lot of work, but that's the gig, and it's really gratifying when you see a few million people using something that you've toiled on for years now start to gain a little bit of mainstream traction.
Absolutely. And well, in that context, then, if you are gaining traction, and obviously the same will be true for, all kinds of different crypto service providers around the world, and I suppose particularly exchanges, probably seeing a steady rise in new user signups and new wallet registrations on all the different blockchains, all that kind of stuff, all pointing up. At the same time, we've seen, I suppose, a how would I describe it? We've got the likes of Gary Gensler, right, and the SEC talking more about how they see the crypto space developing, and how far they want to keep an eye on it, shall we say. So look, you will understand this kind of US, particularly the US regulatory environment, much better than most. So I'd love to get your perspective on, how you see Gary Gensler and the SEC approaching this, and are they on the right path, I suppose?
Yeah, it's a good question. I know Gary a little bit. He's seen me present at MIT, and I've seen him present, and he's a smart guy. He does understand the basics here better than maybe better than predecessors. I think that his comments around DeFi are probably mostly correct insofar that he is making the point and the argument that a lot of these services that market themselves as DeFi, insofar that they are truly decentralized, aren't truly decentralized yet. And that means that as if you have an off switch, you're basically facilitating the trading of something that they might consider a security, that you're probably a broker dealer. And if you're not registered as a broker dealer, you're probably violating some laws. And there's a really good chance that enforcement will come after you. And he's been very clear about that. And now, I'm not going to opine whether I agree with those laws. It's irrelevant. The laws exist, and you have to follow the laws, or you're going to basically have to deal with SEC enforcement. And so I think that he's basically sending notice or serving notice to the industry that if you're marketing yourself as DeFi and the D isn't quite D, as we're saying, then you need to rethink what you're doing. Now, that's different from the protocol level, as we discussed before. I think some of these protocols are quickly becoming fully decentralized, if not already, and they can be used in a way where the protocols themselves aren't necessarily violating a law. And so insofar that TCP/IP or Bitcoin, the protocol, isn't violating any law. And then, we'll see how things evolve from there. I think it would be better for the industry if the SEC looked at some type of sandbox framework for figuring this stuff out, as opposed to letting service providers and kids at MIT and Stanford and other universities just kind of launching software and playing spin the bottle with their future from a legal perspective. It doesn't really make sense. That's not how innovation should work, in my opinion. Give the kids room to play, as we would say, right? Let them figure stuff out, call it a sandbox, disclose the risks that you can lose all of your money doing this, and push people in the direction of full disclosure and having an operating sandbox that doesn't confuse traditional securities offerings with what effectively is just new software, right? And I think that's missing in the dialogue today. Commissioner Pierce has mentioned this a few times, that we need the sandbox model. I don't hear anyone in Congress calling for this. I hear a lot of misunderstanding. I was astounded at the coverage that my tweet of Senator Cruz's video got. I think it got a couple of million views, where he basically said there probably aren't 5 people among us in the Senate and Congress that can actually explain what the hell a blockchain is. And I was astounded to hear a senator use that word or that sentence in regards to anything, right? Never mind Bitcoin
Ted
or
Cruz.
blockchain.
Never mind it being Ted Cruz.
Yeah, well, I don't know as much about him except for when he ran for president, and I discounted that. But I was actually very impressed that he would say that, which is why I tweeted it. But not only because he would be willing to say it, because I'm sure it's true. Right. And so, but yet at the same time, I'm sure a lot of the statists and apologists for the money printing would simply turn Bitcoin off if they had a legal justification and or ability to do so. Thank God they don't. Right.
Yeah, well, sorry to interrupt, Bill. It's just, from, it's just that whole sort of debacle with the infrastructure bill, and the valid and gallant attempts, I guess, to push back from the crypto community. But it just illustrates the kind of the depressing nature of the political system, right? Even in what it's easy for me to say this as a non-American, but it's just. You see the effects of lobbying and just, as you say, the politicians there, none of them have a clue really how technology works, and most of them are, again, not to be ageist, but it's just weird that aging boomers sort of passing laws against the younger generations. I'm talking in cliches, but I think you know what I mean, right?
Yeah. I think this problem transcends age. Look, I'm an older guy, and I don't want these people to be doing what they're doing. I think that what's always disgusted me about politics in the West is that we have this idea of the Hippocratic Oath in medicine, which comes from ancient Greek, right? Medical texts,
Yeah.
which basically says you have to swear uh, to the healing gods or whoever it was, that you are basically going to do no harm first, right? And could you imagine what the world would be like if our politicians had to make the same Hippocratic oath in terms of how they pass laws? In other words, we promise to do no harm. Now, how can you do no harm if you don't understand what you're regulating, right? So by definition, you would have to understand it first before you could regulate it. And how beautiful and amazing would that be? Because in most cases, once they understood it, they'd probably just leave it alone because they realize it doesn't really help anyone. No one is asking for Bitcoin regulation. No one, except for Congress people themselves, right? So it's not like the average consumer is saying, "Oh my God, please protect me, please regulate this. I don't know what to do," right? That's nonsense. And so, how amazing would the world be if we had the political equivalent of a Hippocratic oath, right?
I think that's it's a smart idea, and it's so smart, Bill, that I don't think it will ever happen.
No chance, no chance whatsoever.
All right,
but I can dream, can I?
Absolutely. Let's switch gears slightly, Bill. I'd love to get your perspectives on, what you see happening in the markets at the moment. I imagine you're a little bit kind of price agnostic in terms of, the day-to-day price movements. But yeah, I mean, just in terms of, I guess, from the lens of what you see happening with, Abra and growth metrics, do you think we're in a sustainable kind of longer term crypto bull market? Where in the cycle are we?
Well, I liken it a little bit to venture. When a company is in this phase of growth, the public usually doesn't see it, right? And so there's trials and tribulations of running a company where the value goes up and down, and you only see it when the company goes public. We're living the value of these things in real time. And so lots of startups become insolvent on their way to multi-billion-dollar valuations, right? Google was insolvent multiple times before it figured out the AdWord model. And so Bitcoin and Ethereum have gone through those trials and tribulations as well. Now, that's exacerbated by the fact that you can bet on these protocol tokens using leveraged futures contracts, which you couldn't do with certain private equities, right? That would be interesting. So that creates enormous volatility on the way up, right? And so that's why when companies or individuals or retail investors are able to leverage themselves 10 to 50x betting on one of these tokens, that they can get wiped out, and you can see cascading drawdowns because of people getting wiped out. And so that's happened 15, 20 times over the last 10 years at least, probably maybe more. And I suspect it'll happen some more times on the way up. So I don't look at it as if we're in a protracted bull market or bear market. This is a new economy, a new way of looking at banking, money, finance, and we're in, to use the American baseball analogy, in the first inning of this game. And the fact that the price goes up and down the way it does is irrelevant for the long term. I think this changes everything. I think it's a multi-trillion-dollar asset class, probably to the tune of 100 trillion, if not more than that. And we're just getting started. And yeah, it's going to be very volatile on the way up. And if you're willing to put yourself on the front lines of dealing with futures markets and leverage and all the things that go along with it, and just be patient, you should reap the whirlwinds of that. Just like a venture investment, minus the leverage piece that venture doesn't have to deal with. But But if you believe and you really dig in to the way money and banking works, it's truly the last big bastion of businesses that haven't been completely, rebuilt from the inside out via the internet. And I don't mean a fancy mobile banking interface on a traditional banking service. I mean completely rebuilt from the inside out, where it's crypto centric and blockchain centric, using Ethereum and Cardano's contracts in the future, and Bitcoin as the digital gold, et cetera, et cetera. And, you know, that is an opportunity bigger than what most people can imagine, in my opinion.
Yes, so that's a great answer, Bill. And look, I couldn't agree more. Kind of short term price movements is really just noise. Um, and yeah, good thoughts. Switching gears again, and this is why crypto is so fascinating to people, because you can approach it, Bill, just from so many different angles. And so, the price action is obviously a one side of it. We've got NFTs and DeFi and what's happening on the regulation side. Then, of course, you've talked about decentralization a little bit, Bill, on the kind of the varying degrees of that. And I always like to say that, a good way to understand decentralization is it's a journey, not a destination. And I think most people would agree that Bitcoin is, it is a decentralized, censorship resistant blockchain, and some of the other blockchains they're not really at that kind of scale of decentralization that Bitcoin is. So I guess what I'm asking here, Bill, is I'd just love to get your thoughts on, for one, Ethereum and Ethereum's move to proof of stake, all these other smart contract platforms. We've seen the recent rise of Cardano, and that's enabling smart contracts. From your kind of your technical perspective, how much of this is smoke and mirrors, and how much is a legitimate, exciting technological innovation, and how do you pass the difference between the two?
Well, that's a great question. Look, I think that in the long term, I can see a model where proof of work becomes significantly more decentralized than it is today. Now, I can also see a scenario where it becomes more centralized, right? But I wouldn't be surprised if, as governments start to get into it, companies start to get into it, that you really do see, and even electric companies themselves, right? A model where it's highly decentralized. I have a tough time seeing proof of work as potentially decentralized. I'm sorry, proof of stake as potentially decentralized as proof of work. Now, I could be wrong on that, but I think that the trade-offs as they relate to smart contract systems make sense. Now, let's put that in very stark terms. If Bitcoin is meant to be digital gold today, and a settlement layer in the future for things like the Lightning Network as well as digital gold, and Ethereum and its layer and its other competitors are really meant to be global computers that enable all types of smart contract based applications, then I think this bifurcation between proof of stake for those systems and proof of work for that digital gold system of Bitcoin actually makes a lot of sense to me, right? And I actually fully support that, because we are willing to trade a modicum of decentralization. As you said, it's a destination, right? Or it's a journey towards that destination. But if these systems aren't usable at global scale, it's just a sophisticated toy. And we all want it to be more than a sophisticated toy. And we don't know any other way to get there with layer one other than proof of stake, I think, at this point. And I'm specifically referring to this idea of a global computer that can service NFTs, service DeFi, service stable coins, service decentralized games, and all the other applications of smart contracts that we haven't even thought of yet. And whereas we want Bitcoin to be that boring, keeps chugging along tortoise, ultimately beating the hare, that's just going to keep doing its proof of work and be functioning in 50 years the way it is now. And that's the difference in why I think proof of work makes sense for Bitcoin and proof of stake makes sense for smart contract based platforms.
I love it. Very, very good thoughts. A nice nuanced answer there, Bill, and I would expect nothing less. Let's close this out. Let's go to a very quick break, and then we'll come back and we'll finish off with the very famous Crypto Conversation hot take round.
Grow your wealth with the world's leading digital assets institution, Nexo. Earn up to 12% on your digital assets with Nexo's high yield savings account. Treat yourself, your crypto and fiat with the industry best crypto and fiat services, featuring compounding interest paid out daily, 18 available cryptocurrencies, Bitcoin, Ethereum, Litecoin, stablecoins, and more. 3 fiat currencies are accepted: Euro, Pounds, and USD. Up to 375 million insurance on all custodial assets, top-ups and withdrawals available at any time, and 0 fees for using Nexo Earn Suite. Start earning at nexo.io. That's nexo.io.
All right, we're back, and I'm with Bill Barhydt. Bill is the CEO of Abra, which of course hopes to be the future of crypto banking, and they're well on the way there. Bill, look, I like to finish each podcast with just a quick round of rapid-fire crypto conversation hot takes. Are you up for it?
Absolutely, let's do it.
All right, just want your quick, snappy answers, hot take style, Bill. Number one, of course, is where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
I'm all the way on the more competition we have, the better side of the spectrum. We need technology competition to make everything better for everyone, including Bitcoin. There are things that I'd rather test in Litecoin first, like Mimblewimble, than launch in Bitcoin. So I, for one, fully support this idea.
I love it. All right. Well, Bill, what would you say is your firmest conviction, crypto opinion?
That it's not going anywhere and it's going to take over the world, and that banking, financial services, gaming are all going to become decentralized, and this will become the basis for a global decentralization movement that will make its way into every aspect of our lives.
I love it. I love it. Here's a curveball for you, Bill. A UBI as a potential fix for AI-induced automation, or a kind of, dystopian wealth inequality-ridden future. UBI, good idea or a bad idea?
Horrible idea. It's a foregone conclusion that it just won't work. It's no different than any of the other social programs that have been tried in oil countries, producing countries. And as Margaret Thatcher said, the problem with socialism is eventually you run out of other people's money, and UBI is just lipstick on that pig again, and it's not going to work. So what we need is a movement towards self-sovereign entrepreneurialism that motivates and incentivizes people to start companies, to get into business, to embrace new technologies. It's basically the opposite of what we're seeing out of China right now. China went through a decade of unheralded expansion because they had leadership that actually got this, and they could manage it in a way that didn't make them free, but at the same time enabled entrepreneurs to believe that they could succeed. They've done a 180 on this, and they're going to pay a huge price. And UBI is just another branch on the same stupid tree.
Nice. All right. Well, Bill, another Bill, Mr. Bill Gates, famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. So look, whatever you like here, Bill, Abra, blockchain, DeFi, what does it all look like in 10 years' time?
Yeah, I think in 10 years' time, the US-centric model of credit scores gets replaced globally, and consumers start to get instant credit by using crypto-based holdings to get credit lines. And that becomes a multi-trillion-dollar business globally in 10 years. And it will completely change how the credit card networks work, how these crypto-centric banks work. And I believe I believe exactly what Bill Gates said, that in the short term, it's very hard for us to understand how compound interest and compound thinking and exponential thinking works at scale. And I think this is a perfect example of how exponential thinking is going to change banking.
I love it. And kind of the flip side of that is a quote. You'll be even more familiar with this quote because it comes from sci-fi author William Gibson, who of course said, Bill, that the future is already here, it's just not evenly distributed. So in that context, can you think of an example of the future being here right now, but most people just aren't really aware of it?
Well, sure. You can get by without a bank account and not have to use paper cash, right? So, and be crypto-centric. And it's totally possible today. You can get an account like Abra, convert your income to Bitcoin, get a debit card that functions off of crypto. And it's like cutting the cord in the TV land. Like if you said to your friends, oh, I'm gonna get rid of my satellite or cable TV connection 10 years ago, people would have said, well, that's silly. It's just not gonna work. The internet's not ready for that. Now it's normal. You don't need a cable television subscription to watch TV. You use YouTube TV or Hulu, or in the US or whatever version of that works in your geography, plus Netflix and Disney, and you're good to go. The equivalent is already happening in crypto, and the rest of the world is going to catch up.
I love it. All right, we're almost done here, Bill, but time to zoom out, time to get a little bit weird. What do you see as the long-term future for the human race? Do you see dystopia or utopia?
I think it gets better and better. I think we're headed towards a future where technology enables freedom, and people will have no choice but to embrace kind of this idea of peace and love, but via agency, self-sovereign agency over your life, not some government mandated idea of peace and love. And I think that's where this is headed. And the decentralization movement is really exciting to me because I think it's going to be a key enabler of that utopia. I think things like the metaverse and virtual reality and augmented reality are going to change education and democratize access. I think Africa is going to leapfrog the rest of the world in 25 years from an education perspective because they're going to adopt all of these technologies first. And I think it's kind of the last place on earth where you have a massive population that just doesn't have access to our quality of secondary education. And when that happens, look out. And so, yeah, I think we're headed towards utopia.
Awesome. All right. Well, Bill, the final question is, what is your favorite science fiction, a book, a film, a show, or universe?
I'm a little weird. I really liked, what was it? Fountains of Paradise, about the space elevator. I really want a space elevator. I don't know why. I don't know why I want that, but I think we need it. I think it would just create like this whole kind of technology economy that we don't have today, and it would completely change our perspective on space. And I think it's technologically feasible now. So I'd have to go with Fountains of Paradise, not because it's some, literary like epic novel, but just because it's such a compelling technology perspective to me. And it was actually an extension of what was in 3001, where they were using the space elevators as well. So I think I'm going to go with that.
I love it. Yeah. So, and a space elevator is in simple terms, it's a kind of a planet to space or planet to planet style transportation system, right?
The idea being that you could leverage something in orbit to tether a moving elevator into space using some type of carbon fiber cable that wouldn't buckle under its own weight, using nanoscale technology, I guess, in today's terms.
Amazing, amazing. Bill, this has been a lot of fun. I've very much enjoyed your perspectives. I've enjoyed talking to you. Thank you for coming on the show. Nothing else to say really except to hand the microphone back to you. And look, please tell the people where they can go to find you on your various platforms and where they should go to engage with what you and the team are building with Abra, and like any exciting new product developments or anything you have in the pipeline. Please go for gold.
Sure. You can download Abra on the app stores, ABRA. You can find me on Twitter at Bill Barhydt, or you can follow Abra on Twitter at Abra Global. We're very active on social media, so we're very easy to find.
Awesome. Very, very much enjoyed our conversation. Thank you, Bill. All the best, and bye for now.
Thanks, Andy. Great to be here.
All right, guys. Thank you very much for listening. That's today's show. Don't forget to subscribe to the Crypto Conversation in whatever podcast app you are using. And if you want to get at me, just drop me an email, andy@bravenewcoin.com. All right. Thanks for listening, guys. This was the Crypto Conversation for Brave New Coin. See ya.